China is rapidly overtaking the United States as a dominant economic power globally. Since the financial crisis, the Chinese economy has experienced remarkable growth, while the US economy has stagnated. China has become the leading trading partner for many countries worldwide and a key player in global supply chains. It now produces more commodities, automobiles, and tech exports than the US. Moreover, China holds over $1 trillion in US debt and has surpassed the US in its trade deficit, contributing to the loss of hundreds of thousands of American jobs. Overall, the global economic landscape has shifted, with China gaining a significant advantage over the US 30. Since 1970, China has experienced remarkable economic growth, with its maximum GDP growth rate reaching an astounding 19.3%. In contrast, the United States' maximum GDP growth rate during the same period was a more modest 7.24%. Furthermore, the US economy has seen negative GDP growth in 8 years, highlighting the volatility and occasional downturns it has faced. Interestingly, China has only experienced negative growth in 4 years, demonstrating its ability to maintain more consistent and robust economic expansion. 29. According to data from the World Factbook, China has surpassed the United States in both the agriculture and industry sectors. The agricultural output of the United States is merely 17.58% of China's, a stark contrast that underscores the remarkable advancements made by the Chinese agricultural sector. In the industrial realm, the US accounts for 77.58% of China's industrial output, indicating the growing strength and dominance of China's industrial capabilities. 28. The year 2001 marked a significant turning point for the Chinese economy as the country joined the World Trade Organization, WTO. Following this landmark event, the Chinese economy experienced a decade of remarkable growth, expanding at an annual rate of 10%. During this same period, the United States' share of the global economy shrank to almost half, declining from a prominent position to just 22% of the world's economic output. This shift in the global economic landscape highlights the rapid ascent of China and the relative decline of the United States' economic influence on the world stage. 27. Equally important, the economic landscape has shifted significantly in recent years, with 90 countries now trading more than twice as much with China as with the United States. This stark contrast highlights the growing influence and importance of China in the global economy, as it has emerged as a dominant trading partner for a vast majority of nations around the world. 26. According to data from the United States Department of Energy, China has solidified its position as a crucial player in the global supply of key raw materials essential for modern technologies. The country refines an astonishing 60% of the world's lithium and percent of the world's cobalt, and mines 68% of the world's graphite, 3 core inputs for the production of high-capacity batteries that power everything from electric vehicles to consumer electronics. Furthermore, China controls over 90% of the total global supply of rare earth elements, a group of 17 crucial metals that are indispensable for a wide range of high-tech applications from electronics to renewable energy systems. 25. Over the past 2 decades, China has strategically positioned itself as the most essential link in the world's critical global supply chains. This dominance has been achieved through a combination of targeted investments, state-backed industrial policies, and the country's sheer manufacturing prowess. As a result, China has become an indispensable node in the global production and distribution networks that underpin modern economies, making it a pivotal player in the international economic order. 24. In 2021, China's exports to the United States reached a staggering $461.7 billion, far outpacing the US exports to China, which amounted to only $106.5 billion. This significant trade imbalance resulted in a massive $355 billion trade deficit for the United States with China. This deficit has been a persistent thorn in the side of the U.S. economy, as it represents a substantial outflow of American wealth and employment opportunities to the Chinese manufacturing powerhouse. 23. On the other hand, the United States holds the distinction of being the world's largest importer, spending a colossal $2.6 trillion on foreign goods in 2021. In contrast, China, while a formidable economic force, is the world's third largest importer, with its imports reaching $2.1 trillion in 2018. This disparity highlights the United States' insatiable appetite for imported goods, which has contributed to the widening trade deficit with China and other trading partners. 22. China's economic clout extends beyond just trade imbalances. It also wields significant influence in the global financial system. China is the second largest foreign holder of U.S. treasuries, owning a staggering $1.1 trillion worth of these debt securities as of August 2020. This position as a major creditor to the United States gives China considerable leverage over the U.S. economy and policy decisions. The country's strategic holdings of U.S. debt are not merely a passive investment. They are a deliberate attempt to support the value of the dollar. This is because China pegs its currency, the yuan, to the U.S. dollar, a move that helps maintain the competitiveness of its exports. However, this role as America's largest banker also gives China an edge in financial negotiations and policy discussions. For instance, China can devalue its currency when needed to keep its export prices competitive, a move that would undermine the value of the dollar. Conversely, whenever the U.S. pressures China to raise the yuan's value, China can threaten to sell off a portion of its treasury holdings, a move that would potentially collapse the value of the dollar and cause significant turmoil in global financial markets. This delicate balance of economic interdependence and strategic positioning has significant implications for the ongoing U.S.-China trade relationship and the broader global economic landscape. 21. Since the turn of the century, the United States has seen a significant decline in its manufacturing sector, with the country losing 3.7 million manufacturing jobs to China. This dramatic shift in the employment landscape has had a profound impact on the American economy and workforce. 20. Back in the year 2000, manufacturing jobs accounted for over 20% of all jobs in America, a testament to the nation's industrial might and the importance of the manufacturing sector. However, in the intervening years, this landscape has changed dramatically. Currently, only about 5% of all jobs in America are in the manufacturing industry, a stark contrast to the past. This shift reflects the ongoing challenges faced by the American manufacturing sector, including increased global competition, automation, and the offshoring of production to countries with lower labor costs. 19. According to estimates released by the Economic Policy Institute, the erosion of the American manufacturing base is expected to continue, with the country projected to lose an additional 500,000 jobs to China this year alone. This projected job loss is a cause for concern, as the manufacturing sector has traditionally provided well-paying, stable employment opportunities for millions of Americans, often serving as the backbone of local economies and communities. 18. According to the latest calculations from the International Monetary Fund, IMF, the average purchasing power of Chinese consumers is now 1.18 times higher than the purchasing power of their counterparts in the United States. This statistic reflects the significant economic growth and rising living standards experienced by the Chinese population in recent decades. 17. The IMF's purchasing power parity (PPP) method is considered the most accurate way to compare the gross domestic product (GDP) of different countries. By taking into account the effects of exchange rates and price levels, the PPP approach provides a more realistic assessment of the relative size and strength of national economies. According to this data, China officially surpassed the United States as the world's largest producer in 2019. While the US economy generated $20.5 trillion that year, the Chinese economy outpaced it with a total output of $22.5 trillion. 16. World Bank data shows that China's GDP has been steadily catching up to that of the United States over the past several decades. In 1960, China's gross domestic product was a mere 13% of the US GDP. However, by 2021, that proportion had skyrocketed to 73%, representing a remarkable five-fold increase. This rapid economic expansion has transformed China into a global economic powerhouse, with its GDP now accounting for a significant and growing share of the world's total economic output. 15. China's rise as the world's economic powerhouse has been nothing short of remarkable. Over the past 2 decades, the country has strategically positioned itself as the #1 trading partner for a majority of nations across the globe. In 2001, the year China joined the World Trade Organization, the global trade landscape was vastly different. Back then, over 80% of countries around the world had a larger volume of trade with the United States compared to China. This was a testament to America's long-standing dominance in the global economy. However, the tides began to shift in the following years as China's economic prowess continued to grow. By 2018, a mere 17 years later, the situation had reversed dramatically. The number of countries that traded more with China than the United States had grown to a staggering 2/3, or 128, out of the 190 countries worldwide. This substantial change underscores the remarkable pace at which China has transformed itself into the preeminent trading partner for a majority of nations globally. This remarkable shift in global trade dynamics can be attributed to a combination of factors, including China's aggressive pursuit of free trade agreements, its vast domestic market, and its strategic investments in infrastructure and technology across the world. As China continues to deepen its economic ties with countries around the globe, the implications for the global balance of power are profound and far-reaching. 14. China has emerged as the dominant force in global trade, cementing its position as the world's largest exporter. This remarkable achievement has been driven by a combination of factors, including its vast manufacturing capabilities, efficient logistics networks, and strategic policies aimed at promoting exports. In contrast, the United States, once the undisputed leader in international trade, has slipped to the 3rd position, struggling to maintain its competitiveness in the face of China's relentless rise. In 2020, amidst the challenges posed by the COVID-19 pandemic, China's export volume reached an impressive $2.5 trillion, a testament to the resilience and adaptability of its export-oriented economy. The European Union, with its diverse and integrated market, followed closely in 2nd place, exporting goods worth $2.3 trillion. However, the United States, grappling with various economic headwinds and shifts in global trade dynamics, trailed behind, exporting $1.7 trillion worth of goods. This shift in the global trade landscape has significant implications for the geopolitical and economic power dynamics, as China's growing influence in international markets translates into increased leverage and bargaining power on the world stage. The decline of the United States' export prowess has raised concerns about its ability to maintain its position as a leading economic superpower, prompting policymakers to re-evaluate their trade strategies and seek ways to bolster the competitiveness of American-made products. 13. According to the Pew Research Center's income band classification, the size of China's middle class has grown exponentially from just 39.1 million people, or approximately 3.1% of the population in the year 2000, to a staggering 707 million people, representing nearly 50.8% of the country's total population, as of 2020. This astonishing increase of 667.9 million individuals, or 47.8 percentage points, underscores the remarkable economic transformation that China has undergone during this period. The growth of the Chinese middle class is a testament to the country's sustained economic development, industrialization, and urbanization. As the Chinese economy has expanded and diversified, more and more people have been able to climb the socio-economic ladder, securing better-paying jobs, accumulating wealth, and attaining a higher standard of living. This burgeoning middle class has become a driving force behind China's consumer-driven economy, with increased spending power fueling the demand for a wide range of goods and services. The rapid expansion of the Chinese middle class has also had significant social and political implications. As more people have achieved a certain level of economic security and stability, they have begun to demand greater social and political rights, as well as improved public services and infrastructure. This has put pressure on the Chinese government to address the needs and concerns of this growing segment of the population, and has contributed to the country's ongoing process of social and political reform. 12. In contrast, the U.S. middle class has been shrinking at an alarming rate. The share of American adults who live in middle-income households has decreased from 61% in 1971 to 47% in 2021, a significant decline over the past 5 decades. This trend highlights the growing economic inequality in the United States, as the middle class, often considered the backbone of the American economy, continues to erode. The shrinking of the middle class is attributed to various factors, including stagnant wages, rising cost of living, and the shift towards a more polarized economy. As the cost of essential goods and services, such as housing, healthcare, and education, has outpaced the growth in incomes, many middle-class families have found it increasingly difficult to maintain their standard of living. Additionally, the displacement of middle-class jobs due to automation and globalization has further exacerbated the problem, leading to a widening gap between the wealthy and the working class. The implications of a shrinking middle class are far-reaching, as it can have significant social and political consequences. A strong middle class is often associated with economic stability, social mobility, and political participation. As the middle class contracts, the potential for social and political unrest increases, as more individuals and families struggle to achieve financial security and access to opportunities. Addressing the challenges facing the middle class has become a pressing concern for policymakers and economists alike, who seek to develop strategies to revitalize and strengthen this crucial segment of the American population. 11. China has replaced the United States as the primary engine of global economic growth. This shift in economic power has been driven by several key factors. First and foremost, China's remarkable economic transformation over the past few decades has been nothing short of extraordinary. Following the economic reforms initiated by Deng Xiaoping in the late 1970s, China has experienced unprecedented growth, with its GDP expanding at an average annual rate of around 10% for several consecutive years. This rapid economic expansion has been fueled by a combination of factors, including the country's vast and inexpensive labor force, heavy investment in infrastructure, the adoption of market-oriented policies, and the integration of China's economy into the global trade and financial systems. As a result, China has become the world's second-largest economy, surpassing the United States in terms of purchasing power parity and rapidly closing the gap in nominal GDP. Since the 2008 global financial crisis, China has accounted for approximately 1/3 of all growth in the world's GDP, underscoring its growing importance and influence in the global economy. This is a remarkable achievement, considering that just a few decades ago, China's economy was heavily centralized and dominated by state-owned enterprises. The shift in economic power from the United States to China has significant implications for the global economic landscape. It has altered the balance of economic and political influence, with China playing an increasingly influential role in international organizations, trade agreements, and global governance. Moreover, the rise of China as an economic superpower has also brought about new challenges, such as tensions in the Sino-US trade relationship and concerns about the sustainability of China's growth model. 10. China's sustained miracle economic growth over the past 4 decades, at an average rate 4 times that of the US, has redefined the global economic order. This remarkable economic transformation has propelled China to the forefront of the global economy, making it a powerhouse that has profoundly impacted international trade, investment, and geopolitical dynamics. 9. Over the past 2 decades, China has overtaken the United States to become the manufacturing workshop of the world. This shift has been driven by a combination of factors, including China's vast pool of skilled and cost-effective labor, its strategic infrastructure investments, and its embracement of export-oriented policies. China's manufacturing prowess has allowed it to produce a wide range of goods, from consumer electronics to heavy machinery, and has made it an indispensable player in global supply chains. 8. The stunning rise in China's global trade surplus in 2021 marked a significant milestone in the country's economic ascendance. The surplus soared to an unprecedented $676.4 billion, the highest ever recorded for any nation. This remarkable achievement was fueled by a 29.9% surge in Chinese exports, a testament to the resilience and adaptability of the country's manufacturing sector even in the face of disruptive semiconductor shortages that plagued global supply chains. 7. The shift in the global high-tech export landscape over the past 2 decades has been nothing short of dramatic. In 1998, the United States was the dominant player, commanding a 25% share of the world's high-tech export market. In stark contrast, China's presence was relatively modest, accounting for just 10%. However, the intervening years have witnessed a remarkable transformation. By 2021, China's high-tech exports have more than doubled, now comprising a staggering 29% of the global market. This remarkable ascent has come at the expense of the United States, whose technology exports now account for a mere 12%, less than half of China's formidable share. The rapid rise of China as a global technological powerhouse has profoundly reshaped the international trade landscape, with far-reaching implications for geopolitics, economic relations, and the future of innovation. As the world's second-largest economy continues to cement its position as a leader in high-tech exports, it poses an increasingly formidable challenge to the traditional dominance of the United States in this critical domain. 6. In 2020, China surpassed the United States as the country with the most companies on the prestigious Fortune Global 500 list, which ranks the world's largest corporations by revenue. This milestone marks a significant shift in the global economic landscape, as China has emerged as a formidable economic powerhouse. The growing presence of Chinese companies on the Global 500 is a testament to the country's remarkable economic growth and its ability to foster the development of large, multinational corporations that can compete on the global stage. 5. According to projections by Goldman Sachs chief economist Jim O'Neill, China is on track to overtake the United States as the world's largest economy by 2027. This forecast underscores the rapid pace of China's economic ascent and the country's potential to surpass the US as the dominant global economic force in the coming years. The rise of China's economy has been fueled by a range of factors, including massive investments in infrastructure, a thriving manufacturing sector, the emergence of a vast middle class, and the country's strategic embrace of technological innovation and high-value industries. The increasing economic clout of China has significant implications for the global balance of power. As China continues to challenge the US as the world's leading economy, it is likely to exert greater influence on international affairs, shape global trade and investment patterns, and potentially redefine the rules of the global economic order. This dynamic shift in economic power could have far-reaching geopolitical and strategic consequences as the two nations navigate their evolving relationship and compete for influence on the world stage. 4. On the flip side, America has faced significant challenges in its high-tech manufacturing sector. Since 2001, the United States has lost 34% of all its high-tech manufacturing jobs, a staggering decline that reflects the increasing global competitiveness and shifting dynamics of the technology industry. This shift has had profound implications for American workers, communities, and the overall strength of the nation's industrial base. The loss of these well-paying, highly skilled jobs has contributed to economic insecurity and the erosion of the middle class in many parts of the country, underscoring the need for policymakers to address the complex factors driving this trend. 3. China has emerged as a global powerhouse in the automotive industry, solidifying its position as the world's largest producer of vehicles. In 2020, China manufactured over 21 million cars and 4.36 million commercial vehicles, a testament to its industrial might and the investments it has made in its manufacturing capabilities. In comparison, the United States, while still a major player in the global automotive landscape, produces less than half of what China does, manufacturing over 2.5 million cars and 8.37 million commercial vehicles in the same year. This disparity highlights the rapid pace of China's industrial growth and the challenges facing the United States in maintaining its competitive edge in this critical sector. The ability of the US to adapt and modernize its automotive manufacturing capabilities will be crucial in determining its long-term standing in this highly competitive global industry. 2. The manufacturing of computers has undergone a significant shift in recent decades. Today, over 90% of computers are manufactured in China, reflecting the country's rise as a global manufacturing powerhouse. This concentration of computer production in China has been driven by a combination of factors, including the availability of a large and skilled workforce, favorable economic policies, and a well-developed supply chain infrastructure. As a result, China has become the world's dominant producer of computers, meeting the growing global demand for these essential electronic devices. 1. China's manufacturing prowess extends far beyond the computer industry. In 2021, China produced 16% of all the goods consumed in the world, cementing its position as the world's factory. This impressive figure highlights the country's remarkable industrial capabilities and its critical role in the global economy. In comparison, the United States, long regarded as a manufacturing powerhouse, only produced 12% of the world's goods in the same year. This disparity underscores the shifting balance of economic power, with China's manufacturing sector becoming increasingly dominant on the global stage. Conclusion: over the past 5 decades, there has been a widening disconnect between corporate earnings and worker wages in the US, as high-tech jobs have been rapidly outsourced overseas, particularly to China. This has contributed to the decline of the US manufacturing sector and middle class, while increasing the number of Americans dependent on government assistance. Unless significant systemic changes are made, the US is likely to face persistent structural employment issues and the possibility of China surpassing the US as the world's leading economy, especially if another economic downturn occurs. To preserve its global economic dominance, the US must take immediate action.